Voices. We're really excited about this next session because we're doing something a little bit different today. For the first time at AFME, we're recording the session as a live episode of AFME Voices, our podcast series launched last year to showcase policymaking developments shaping Europe's capital markets. Our mission with AFME Voices is to bring nuanced conversations and insights from experts to a broad audience. And today, you're not just the audience at our 6th European Financial Integration Conference, but you're also our live studio audience. And so we're absolutely delighted to be joined by Rodrigo Buenaventura, the Secretary General of IOSCO. And just a little bit of background, housekeeping before we get started. The microphones are live, so we'd be grateful if you could keep background noise to a minimum. And we'll be opening the floor for questions after our conversation, and roaming mics will be passed around for that. So without further ado, please join me in giving a warm welcome to Rodrigo Buenaventura. Rodrigo, to start with, I'd like to ask you perhaps a bit of a basic question, but as one of my favorite podcast hosts always says, there's no such thing as a silly question, and I think this is important. So to start with, could you please remind us of the role of IOSCO?
Well, thanks for having me here, first of all. The role of IOSCO is very similar to other standard setters at the global level. We are a standard setter for securities and derivatives markets. We have been around since 1973, which is a long time, and we are gathering 130 countries in terms of the securities and derivatives regulators. So it is a really global organization. Our headquarters are in Madrid, in Spain. And we not only do standards, because if we only did standards, it would be something like the Madrid Committee, in the reference to the Basel Committee, standard setting for financial markets. We do a lot of work also on top of standards on capacity building for our members, which is having such a broad base of members, that's very important, but also a network of cooperation for enforcement and a multilateral MOU that allows enforcement cooperation between securities and derivatives regulators. So it's a bit of a mix between a standard setter and a network component that is really fascinating.
And can you tell our audience and those of us who are listening to us as well, what value does this organization bring to market participants as well? And I'd be particularly interested if you could maybe also sort of situate that in the context of geoeconomic and geopolitical developments. Why is an organization like IOSCO so important?
Well, maybe the best way to illustrate this is an example. No? For instance, we have a seamless derivatives markets across the Atlantic between the Europe, the UK, the US, in terms of both uncleared and cleared derivatives. Why is that? Well, there's one single reason, which is that we had common standards developed at IOSCO together with CPMI in one case and with the Basel Committee in the other case. Global standards that legislators and regulators embedded in their national rules, allowing a seamless recognition of each other's market participants. So the fact that US investment banks or European investment banks can clear in each other's CCPs or can be swap dealers, let's say, using that term, in both sides of the Atlantic is because we have robust, commonly agreed, common standards, in this case for margins, through the IOSCO ecosystem. That has a big value, not only for depth and liquidity of markets, not only for resilience to shocks, but also for the industry and for the market participants, because it's a bigger market and therefore the operating costs are lower. So I think it's important not to forget what we have achieved in some instances through common standards. Now, you said it yourself, the current situation is a bit more fragmented from the geopolitical perspective. But I would say that the need for cooperation is not smaller because we are seeing trends that are truly global in nature. So things like market development is truly global. Things like tokenization, it's by definition global. Or the expansion of cyber risk So these topics are very at the forefront of our priorities, and I think it makes sense to tackle them globally.
Super. And we'll talk a little bit more about these global trends and how your organization can sort of help accompany them in a minute. But maybe before that, I'd like to ask you a few questions. From your vantage point at IOSCO, you said 130 countries, but I think it's more in terms of the members. It's almost 200,
yes.
something like that. Yet, how does that community sort of see the EU's drive with the Savings and Investment Union in terms of the ultimate objectives? Is this something, I suppose, that the community shares, but do you have any sort of reflections you could share from that perspective?
Well, I would say the issue of capital market growth to serve better the ultimate purposes of the economy, let's say, is not just a European problem. I think it's, if you look at the world, it's very common in many instances and many corners of the world. But it's true that probably the evolution of the dynamics in Europe has been more acute than in other big regions, let's say. If you look at the pre-crisis, so 2000, 2008, the IPOs in North America, in Europe and in Asia were more or less one-third, both in number and amount raised. If you look from 2008 to the COVID period, that went to 35, 37 for North America and Asia. Europe went down to 19. And now, after COVID, Europe represents 12% of the global market. We went from one-third to 12. That illustrates very clearly how these dynamics are not only European, but have taken a bite, let's say, in terms of how capital markets are in Europe. But in any case, there are colleagues, and we have heard that repeatedly, that say that macroeconomic conditions have a role to play there. Probably in Asia, that's the case. Technology and innovation, probably that's the case in North America. The access to favorable banking financing, probably that's the case in Europe. But beyond those, let's say, drivers, probably there is something that can be improved in European markets, which I think justifies the kind of debate that we're having these days.
Yeah, absolutely. And so you spoke about Asia and the US in sort of relative terms compared to the EU. What is IOSCO doing to help its community of securities organizations and regulators to sort of facilitate the development of fundraising on public markets across the globe?
So the role of regulators is a peculiar one, because it's not our role to shape where companies get funds. That should be left for, of course, company executives. Or it's not our role to promote one market over the other. But it is true that public markets they are a public good because they provide transparency, price formation, access. So they are just something more than another way of funding. And there is indeed a work stream that we are just starting to try to compile the public policy initiatives around the world that have been successful in stimulating liquidity and depth of public markets, and specifically public equity markets. Mm-hmm. We have started with these because, of course, doing it for bonds and derivatives would be probably too ambitious. So we are starting that work, which is, by the way, led by the Secretariat in Madrid. And we are developing an analytical framework. We are gathering data and also running surveys with our colleagues on what is going on in different geographies. And then we will try to compile that and find common, let's say, trends or elements that need to be taken into account to tackle these matters. But it's important to do that in a neutral way, so to ensure that markets work and function as they should, but of course leaving the choice to companies on where they want to be funded.
Yeah. So the objective is to have at the end of this examples of best practices, a toolkit that can serve as inspiration for different countries and jurisdictions to use.
Yes, and actually when you start doing this, it is amazing the richness and the variety of what is out there. Because you start listening from colleagues from literally across the world, very interesting public policy measures or or projects that have actually revitalized markets. So I think it's a promising project.
Can I ask you to share one or two examples that have sort of, I know you're at the beginning of the work, but anything that you've sort of noted so far?
We are at the beginning of the work, but I can tell you, there are really interesting projects that have been developed in New Zealand, for instance. Vietnam has gone through a lot of changes in the last 5 years. Hong Kong has seen an explosion of IPOs, probably linked to certain other factors in terms of mainland China companies, but there are also experiences in Africa on commercial paper. So it's really a very diverse world, and we hope that we can learn from those experiences and incorporate them in a structured manner in a paper that then can serve for inspiration. Yes.
Yeah. Super. Well, I think we all look forward to seeing that. Changing topic a little bit, but also asking you to reflect a little bit sort of in the context of some of the SIU objectives. So they also include removing barriers to allow for greater integration of EU's capital markets. And I think that's the context in which the Commission has put forward its so-called market integration and supervision package. And some of those proposals also look at changing supervisory powers in a limited fashion, but introducing some centralization. Now, you have 160 members in IOSCO. Are there any lessons that you can share for us from other jurisdictions on how the institutional setup of securities regulators can foster integration?
Well, I wouldn't call it lessons, because it could be a bit patronizing that from a global organization we are conveying lessons to anybody. That's not our intention. But yeah, there are a lot of experience. I mean, if you look at how regulatory authorities are set up across the world, you find that there is an immense diversity of that, not only in terms of Twin Peaks integrated sectorial, but also in terms of the relation with the executive power, the actual legal powers that they get and all that. If you do the comparison with, you're asking me about the European Union in this case, it is true that the agency, in this case ESMA, that is, let's say, pointed in the proposals as the one that would get some relevant new competences, has a very peculiar legal setting. It sits between...
A European specificity.
Yes, national regulators, but also there is a complex framework at the institutional level in Brussels. And it is true that if you compare, for instance, the way that certain regulatory changes are carried out in the EU with other areas of the world, you see a difference. So, for instance, T+1. T+1 in the US was a project led fully by the SEC. In Europe, all the three, well, the co-legislators, the Commission, they're all involved, plus ESMA, so it's a much more complex. You look at the UK, the level of dark trading has been given and power to the FCA. Here, in the European Union, that is a level 1 decision, at most a level 2, so full legislative cycle. Yeah. So it is true that if you look at a comparative basis, if there's going to be an injection of competences in ESMA at some point in time, you need to assess the legal powers and the legal status of that authority in order to become, that supervisor. So that's an interesting, I think, conversation.
Yeah, no, absolutely. Thank you for that. And then maybe taking a step back, when you look at your membership, but also global capital markets, if I have to ask you to choose what is the single most important factor driving the growth of capital markets between institutional or supervisory setups, rules, and sort of long-term investing dynamics, what do you think is the sort of greatest factor in facilitating that growth?
Well, you mentioned three elements that I think are all important, definitely. If I was forced at gunpoint to pick one, probably I would personally pick the investment dynamics as the most relevant factor in terms of market depth and growth, above the supervisory architecture or the regulatory environment. I mean, they are all important, I think. But if you compare, for instance, the European Union with other markets like the US, there's a lot of context of that, and we don't, I think, need to aspire to become a different thing, but the big driver is the amount of, $49 trillion in long-term investment vehicles in the US, which is something that compared to GDP is way, out of the scale of what you see in the European Union. You can also see in Asia very interesting dynamics in terms of retail direct participation. So it doesn't need to be institutional money. You can also have big retail, but there needs to be an investment flow that is stable and deep enough in order to change the dynamics. I would dare to say also that within the European Union, you also have cases in which with the same regulatory framework, the same rule book, and with an equally fragmented supervisory, clearing, and settlement environment, you have thriving markets like Sweden. There's not a difference in terms of the rule book, there's not a difference in terms of the nationality of the supervisor. You have a fundamental change in the investment culture and in the investment dynamics, and that explains a lot of the results. But of course, on this, I fully respect that there are different opinions, and there will be, colleagues more qualified than me than might think that supervision or fragmentation or the rule book is different. What I can say is that if you compare, I would say, European regulations for issuers, IPOs, let's say, with the US, you don't see a much more lenient regime in the US than in Europe, and still it's a much more dynamic market. And I think the ultimate reason is because the big amount of investment flow that comes into the market every day.
Yeah. So the cost benefit from an issuer perspective is perhaps worth it in the US compared to in other jurisdictions.
Well, I would say that has impacts in terms of liquidity or liquidity premium, in terms of valuations, at the same time, there is so much that you can change on those elements. I mean, clearly it's not a regulatory European debate. It's linked to investment culture, investment education, financial literacy, tax incentives, pensions. There are many. It's a more complex, let's say, level.
It goes beyond financial regulation. Oh, absolutely. If it's okay with you, maybe we can turn to discussing some of IOSCO's other priorities. And at the conference this morning, we heard about, for example, new risks, emerging risks created by technological developments. And one of your sort of big work themes for this year is resilience in financial market infrastructure and AI. And perhaps that was a very wise and timely decision to put that really at the forefront of your agenda. I understand you're also doing that work together with the CPMI. Can you tell us a little bit about that in light of recent developments, the mythos hitting the headlines, and your reactions with your colleagues?
Sure. I would say that resilience of financial market infrastructure has been a priority for IOSCO for literally decades. That's a work that, as you said, Jacqueline, it's some joint work that we have done with the Committee on Payments and Market Infrastructures of the BIS. So what we normally call CPMI IOSCO, that joint group of regulators. And there are two dimensions of resilience on infrastructures, I would say, the financial resilience and the operational resilience. On financial resilience, I think a lot has been done since the great financial crisis. And I would say that looking at the episodes that the market has seen in the last 10, 15 years, the system has proved very robust. Of course, you can always improve it. We have published last year reports on how to improve transparency and preparedness for margins. So there are some other tweaks that we are doing work on general business losses, but I would say that the overall framework is relatively robust and stable. Operational resilience has been a topic of maximum interest in the last, I would say, 4 years. We developed guidance in 2016, 2017. We have updated that guidance, and we have dedicated work streams, permanent ones, within CPMI IOSCO dedicated to resilience of infrastructures, because everybody knows that it's much more likely that you have an accident or an event caused by a cyber event than probably by a market event. So it has been a priority. It is a priority this year, and we are actually developing some further toolkits and practical elements to increase the awareness and also facilitate the implementation of the guidance on financial market infrastructures on a joint manner with CPMI, indeed.
And I wonder if you could share with us also your perspective sort of on the benefits of the use of AI. So, of course, you are focused on managing the risks and ensuring that the FMIs manage those risks. But what do you see as benefits for the FMI sector, but also more generally for markets?
Well, AI is transformative. Actually, I mean, you asked me before about the operational resilience of financial market infrastructures, and AI is also changing that with mythos, but many other risks that are appearing there. Well, of course, we see benefits. We published a report, by the way. IOSCO published a report on AI on financial markets last year, and we listed and identified the transformational benefits that this can have in terms of cost, speed, efficiency, asset management, but also in terms of what AI can do for supervisors. So we are, for instance, we have a structured forum, we call it the SupTech Forum, in which supervisors literally around the world are sharing how they are incorporating AI in a very practical manner to improve supervision. And there are fantastic examples of that. On that, I cannot tell you details of who is doing what for obvious reasons.
I would have been interested.
But it is a truly enriching experience. And paradoxically, or not so paradoxically, is not anymore, developed jurisdictions telling emerging markets how to use these tools. In many cases, you have small jurisdictions in Asia becoming real, authorities on how to use AI. So that is very promising. But of course, supervisors, we tend to be gloomy. They pay us to look at the risks, what can go wrong. So we are, for instance, working on something that we will publish very shortly, by the way, which is a toolkit for supervisors on how to monitor the use of AI by the regulated firms like banks, infrastructures, swap dealers, etc., to make a practical contribution on how this can be supervised at national level.
Super. Another publication for us all to look forward to. Maybe turning to some of the other topics on your agenda this year. I understand that you're looking at equity trading.
Yes.
And this is also something that is being considered in a European context, as you know, particularly in the context also of integration of trading venues in the market and integration and supervision package. Can you tell us a little bit more about that work? Sort of why it came to your agenda, what you're doing?
So what IOSCO is doing on equity trading is more linked to how trading has been changing in terms of the distribution over time within the trading session. So we will publish very soon a report on trading during the trading session and how it's been increasingly concentrated across all geographies, not only in Europe, of course, around the closing auction and the opening period, and what that means for the structure of the market, but also for the price-forming features of those markets, for the resilience, and for the risks. That I think is a very interesting topic. That's one element that we have been working on, and as I said, we will be publishing shortly on that. The other element on trading, specifically on equities, has been around extended trading hours. The idea, we were discussing with some colleagues before that 7-8 years ago, there was a talk about shortening the trading day for good reasons. And now the talk is just the opposite. It's extending the trading day 24/7 or 23/5, whatever you. That creates some interesting opportunities, but also potential risks in terms of the functioning of the market, the resilience, the price formation, the interconnection with other markets, the risk management. So we have been working on that, and we will be publishing a report to stimulate the discussion on how equity markets are being transformed in terms of extended trading hours and what sorts of public policy considerations we need to take into account when addressing that phenomenon.
Maybe if I could ask you just a quick follow-up, perhaps particularly on the first issue. So if I understand correctly, what you're saying is there's been a sort of change in how trading takes place, where it concentrates throughout the trading day, sort of with it being more concentrated at the start and at the close. What do you attribute that to?
Well, I think there's part of that linked to passive investment and to having the need to have a certain point in time at which you do the trades that are going to affect the valuations. So the rise of ETFs is partly linked to that phenomenon, let's say. And secondly, well, like with any trading infrastructure, if there is a time of the day where people meet to do the trades, that was even at the origin of the Amsterdam period, 1609 and all that. That generates some dynamics of concentration. In this case, it's network and scale. So there is an element that is linked to the investment management, let's say, evolution. There is a self-reinforcing period. I think the structure of how competition on trading is taking place also in terms of venues has had a role related to that. But the fact is that when that dynamic starts to become too prominent.
Pronounced, yeah.
Yes. It generates some questions, like, for instance, what would be the ability of the market to withstand a cyber incident?
Particularly at those points
exactly,
of the day.
At that time, and how that affects other parts of the financial system. So it's a very interesting discussion.
Absolutely. And that's coming out soon, you said?
As soon as in the coming few days, yes.
Okay, very good, very good. Perhaps this is also something, not to give the EU legislators or the co-legislators more work, but given that the market integration supervision package is live, maybe something worthwhile for them to look at, because level 1 opportunities don't come that often at EU level. So
actually, I'm old enough to having seen the three MiFIDs. They come every 10 years, exactly. 2004, 2014, 2024. So
yes, absolutely. Maybe just to finish with two other things I'd like to ask you about in terms of what you're doing at IOSCO. The retail participation in private markets, and I think what you call the retailization of private assets. How do you see that? I think in an SIU context, for at European level, it's very relevant as well. We've been discussing at this conference that the objective is to channel savings into productive investments. Of course, as it was said very clearly, the objective for savers is to make sure that they can benefit from sort of robust returns. But at the same time, it would also be good if they could have the choice into which types of assets they can invest. And of course, there are retail investor protection considerations when it comes to private market assets. So there are different challenges and trade-offs that policymakers probably have to make here. How does IOSCO see this?
Well, of course, we see it, as you said, from the investor protection angle. That is the angle that IOSCO, of course, needs to ensure every time. There are aspects of the debate that are closer to financial stability considerations, and the FSB has been doing work on private finance. By the way, we are actively involved as members of the FSB on that. But our angle is typically investor protection. And on that, what we are doing is we are initiating work on access by retail investors to new assets. We call it new, even though some are not that new, but they are assets that are different from the traditional.
For the mass retail investor.
That includes, of course, private assets, both private equity, but mostly private credit, packaged in funds or in vehicles. But it covers other elements, prediction markets, fractionalized shares, tokenized shares. So there are a number of new-ish instruments that are being offered to retail investors. And on that, you were asking me in terms of what is the basic tension or the balance. Well, the basic tension there is that on one side, it doesn't make much sense to prevent retail investors from accessing certain corners of the financial market in terms of, equitable access. On the other side, we know that the comprehension and understanding of retail investors of complex products sometimes can lead to exposed problems when those products are not sold, let's say, perfectly. And there you have two or three elements that can act as, as checks and balances. One is disclosure of the product. The other one is advice and asset management, the role of the professionals, let's say, in the mix. The other one is financial understanding and literature of and literacy, of the clients. Financial education and financial culture is important, but only at the margin, because we know that in many instances, in the last 20 years, we have seen products that were not fully suitable for the type of client that were nevertheless sold to that type of client, generating big problems afterwards. So it is a very interesting discussion around the gatekeepers in the process. So, for instance, the role of financial advisors, regulated financial advisors on all these, but also the disclosure of the product. So we are doing work on that. It will take a bit more than the reports that we are going to publish in the coming days, so bear with us on these. But we are determined to look seriously into these matters of access by retail to these type of structures. Not only in the investor protection side, which is most of what we're doing, but also, marginally on the financial stability side, which is what the FSB is looking at.
Okay, very clear. And then as a final question from me, we started talking about, at least getting a little bit into the depth of your work this year. We started talking about technology, at least from the perspective of the development of AI. I'd like to ask you also about DLT. I think it's also an area that has huge potential in terms of asset tokenization, settlement, etc., efficiency gains. What is IOSCO doing to accompany these developments?
Well, the whole area of what we call fintech, so the incorporation of technology to finance, and of course DLT is an important element, has attracted a lot of work within IOSCO. I mean, in the last 6 years, we've published 24 papers on this at an immense rate. Okay, so it has been at the forefront of our priorities, and it's still at the forefront. We have actually a fintech task force that is composed of board members, so at the highest level, that is specifically looking into these matters. So on tokenization, we published a report in November on how we view the risks and opportunities of tokenized assets. It's a small part of the financial system, but it's a growing part. And we know that probably this time is focused on ways of funding that actually can reach real companies, companies that employ people, create growth, etc., as opposed to other discussions that we have seen in the last few years.
And who may not necessarily have easy access to public markets for the time being.
Exactly, and I was going to say that one of the main benefits of this trend is, one, in terms of cost for the investors, because it can have the potential. We need to see it scale yet, and we need to see it how it resists a crisis. But the potential is that the cost for investors might be lower, so more efficient, okay, clearing, etc. But the other big element is what you just mentioned, Jacqueline, which is it can bring down some barriers at national level on how companies tap markets, but also how investors access assets that now are out of the reach. Yes, or they need a very expensive chain of brokers, dealers, custodians, sub-custodians, etc., to buy something, in a different country. I'm talking worldwide. So I think that is one of the big promises of this. We are looking at it, with a lot of attention, but we are also seeing, a couple of factors that are, preventing the growth. One is interoperability. It was mentioned today and many other conversations between the networks. The other one is the cash leg, so the settlement asset, the digital money that you need for that, and also some legal considerations around the instruments that are worth clarifying for this industry to
take
off, at a certain speed. But it is part of our work program, and we intend to continue to pay a lot of attention to this.
Fascinating. So some very interesting developments to look forward to. Rodrigo, I'd like to thank you very much for being so generous with your time and answering all of my questions.
Pleasure.
Perhaps just before we close, we can take 1 or 2 questions from the audience. No questions? There we go.
Shy question over there.
Yeah, thank you. So we hear a lot about the threat of regulatory fragmentation and divergence in the standards that were on which we found a consensus after the financial crisis. I just wonder whether you have some views on how you experience that among the community of securities regulators, and whether there are some common principles that could bring, US, Europe, and Asia together around, maintaining open markets in particular and countering that threat of financial repression and capital account controls that is clearly on the horizon.
Well, thank you for the question. I think it is evident that the geopolitical, let's say, scenario has changed in the last few years. That has an impact on every international organization, whether it's a financial standard setter, the World Health Organization, United Nations, you name it. Of course, it has an impact. But I would say that there are a couple of reasons for optimism, if you allow me. One is that we have a network of regulators that is truly global. I'm talking about IOSCO in this case, where politics has not played a big part in the existence of the organization. No? So we have a very broad membership of even countries that are at war with each other, and they still come to the IOSCO meetings. That is one element. So there is a true sense of community between the regulators. The other one is that a couple of the trends that we are discussing, crypto, market development, cyber, are so global by nature, not only in terms of their origin, but also in terms of their impacts, that they are strong drivers for common action on those elements. Because otherwise, in the absence of a commonality in the regulatory side, you can have really nasty events going on in one or the other direction. So there is a more the risk of fragmentation is there. I would not deny that. But I think that on certain aspects and topics that we are dealing with, there are strong reasons for coordinated action, and you can feel that in the discussions.
Thank you, Rodrigo. I mean, that's very good to hear, and I think a positive note for us to end on. So please, ladies and gentlemen, join me in thanking Rodrigo Buenaventura for joining us.